Well, I got news for the consumer. Inflation is already out of control. The Fed failed to act. In fact, the actions of the Fed created the inflation.
What causes inflation? Well, everyone knows that the Fed is the only entity increasing consumer goods prices in every product, right? But Fed Chairman Jerome Powell tried to make every American a fool when he stated the reason for high inflation. And that's not the end. He also revealed that the interest rates would continue to increase. And so will inflation. He said that the Fed would continue fighting inflation, but Peter Schiff has something else to say. The Fed has already lost the battle against inflation. What more did he say, and what more is the Fed hiding and keeping away from Americans? Let's listen to what Peter Schiff, the founder and CEO of Euro-Pacific Capital Incorporation, author, analyst, and chief economist, has to say about that. Watch the video until the end to know what you, the investors, should do in these uncertain times of high inflation. Let's get started. Recently, Fed Chairman Jerome Powell did a press conference where he told the Americans about the situation of inflation, wages, and interest rates. However, if you watch the press conference, you will see that the U.S. is the only country with a growing economy and healthy inflation and interest rates. But the reality is quite the opposite. Jerome Powell said that the labor market has been seeing a decreasing number of workers. However, the demand for workers is high. Therefore, whenever the demand for something is high, the prices increase. And since companies employ workers, they have to pay higher salaries. Due to this, the production cost increases, which is why we are seeing inflation. This argument could be swallowed if it had come from someone with little knowledge about the economy. However, this came from the U.S. Fed chairman, which raises many questions. How can he give such baseless reasons when the Fed itself increased inflation? Jerome Powell said that the inflation rate would continue to increase, which is why interest rates have to increase. He said that the interest rates have to stay higher for a long time, because service inflation will stay in the foreseeable future. Instead of confessing the real inflation, he shifted all blame to an increase in wages. However, as he said, the Fed will fight against inflation and keep it in check. But is this the reality? First, listen to what Jerome Powell said at the press conference.
Labor market. One where we haven't seen much softening, where job growth is very high, where wages are very high, vacancies are quite elevated, and really there's an imbalance in the labor market between supply and demand. So that part of it, which is the biggest part, is likely to take a substantial period to get down. The goods inflation has turned pretty quickly now, after not turning at all for a year and a half. Now it seems to be turning, but there's an expectation really that the services inflation will not move down so quickly, so that we'll have to stay at it, so that we may have to raise rates higher to get to where we want to go. And that's really why we are writing down those high rates and why we're expecting that they'll have to remain high for.
Here's a little reminder to like the video if you were loving it. And if you don't want to miss videos about the evolving economics and the financial order, subscribe to our channel. Let's continue now. And that's where Peter Schiff came forward to reveal the truth Jerome Powell was hiding. First, Peter Schiff said it was wrong when Jerome Powell said the Fed was fighting against inflation. The Fed said that consumers have to pay extremely high prices and feel pain when the Fed fails to fight inflation. However, Peter Schiff said that the news for the people is that the Fed has already failed. The high price consumers are paying today is the worst the Fed brings. However, this doesn't mean this is the worst inflation ever that will hit the U.S. Peter Schiff said that the wage increase isn't why inflation is increasing. Rather, the case is otherwise. He said that since the Fed increased inflation by printing more money and adding it to the circle, wages also had to increase. Mistakes that the Fed committed cannot be blamed on something as mere as high wages. Since the start of economic knowledge, we never saw moments when wage increases multiplied product prices this much. Peter Schiff said that the Fed failed to balance the money supply and caused the worst inflation to take over the country. At this point, Jerome Powell cannot set the ground for further inflation increase. However, this is inevitable. Inflation will increase, and the Fed cannot fight against it for longer. At last, the Fed will accept the defeat because fighting is like moving against the water current. Jerome Powell said about wage increases so that more money supply can be pumped in, which will further increase inflation. All these things will worsen the situation, and the foreseeable inflation will break consumers' nerves. Listen to what Peter Schiff said.
Well, Powell said that the consumer would be in for the most amount of pain if the Fed failed to act and let inflation run out of control. Well, I got news for the consumer. Inflation is already out of control. The Fed failed to act. In fact, the actions of the Fed created the inflation, and it's going to get a lot worse. And Powell is looking at wages rising and thinks that that might push up inflation. No, rising wages don't cause inflation. Inflation is what's causing wages to rise. Wages are just the price of labor, and prices are going up. And eventually, the Fed is going to stop fighting inflation when the recession gets much worse, and in fact, when it becomes a financial crisis.
So what should the Fed do now? Well, Peter Schiff has the answer. However, it will be a highly unpopular, painful, and ego-losing act for the Fed, which thus it won't choose. Peter Schiff said that to really fight inflation gradually, the Fed has to increase interest rates continuously. He said that interest rates have to go above the inflation rate, which will attract people to start saving. Plus, higher interest rates will allow the Fed to balance inflation, and people will find it easy to deal with the situation. But hasn't the Fed increased interest rates? Well, yes, it has, however. Peter Schiff said that these interest rates aren't enough. Apparently, interest rates are increasing. But the reality is that the interest rate increase is taking place after so many years. During these years, inflation has been increasing, but the interest rates kept the same. Therefore, increasing interest rates today is useless because the inflation rate has already peaked. If the Fed wants to take the situation under control, it has to increase interest rates further until they go above the inflation rate. High interest rates will also restrict consumers from taking less debt, which in turn is another good sign of a good growing economy. However, instead of thinking precisely about covering inflation, the US government is increasing its spending. Peter Schiff said inflation wouldn't come down unless the government lessened spending, which doesn't appear to be a possibility. Listen to what Peter Schiff said.
Really fight inflation, we would not only need much higher rates than the rates we have right now, because rates need to be enough above inflation to encourage savings again, and our savings rate is basically at a record low, and consumer borrowing is at a record high, so that is not helping. But also government spending continues to increase, budget deficits continue to rise. You're not going to fight inflation unless you get cuts to government spending. Right now we're getting stimulative fiscal policy coming out of Washington, so everything is screaming more inflation, not less.
So at this point, what should you, the investor, do? Peter Schiff provides recession-proof advice for investors during the high inflation and lingering recession environment. He said that since inflation will continue to rise in the foreseeable future, investors should invest in stocks that pay dividends and are independent of the Fed's involvement. In other words, investors should invest in stocks that don't fluctuate when the USD price goes up or down. When you buy USD-dependent stocks, the prices go down when the USD loses price, but the case is the opposite with non-USD-dependent stocks. Peter Schiff said that investors should invest in recession-proof stocks, which his firm has been choosing, which is why those stocks have been paying good returns even during times of recession. Listen to what Peter Schiff said on that.
You have to continue to recognize that the game has changed. We're going to be living in a high inflation environment for the foreseeable future. Rates are not going back down to zero, but they're still going to be negative in real terms. And you have to invest in real businesses that actually have earnings and pay dividends. That's why if you look at our strategies year to date, our value strategy and our dividend payer strategy have delivered positive returns so far this year in long-only portfolios, because we own the type of stocks that do well in an inflationary environment, and they're going to do even better as the U.S. dollar really starts to fall, because the stocks that I'm buying are not in the United States, and so their prices and revenues are not in U.S. dollars, and so they will benefit from the decline of the dollar, which is going to kick into a higher gear when I think the Fed stops hiking rates because the economy is too weak and it's got a bigger problem to worry about than inflation.
What do you think? Will inflation continue to rise, or will the Fed win the battle? Should the Fed keep the real reasons and facts hidden that are causing inflation to rise? Comment right below in the comment section. Do you think high wages cause inflation, or is the case otherwise? Do you want to watch more videos like this one? If yes, please like and share the video and subscribe to our channel for more videos on the latest economics and financial news. Until the next video, stay tuned.